One question I'm asked a lot is what's the difference between a ETF and mutual fund? I see this a lot on chats and forums, and people are wanting to know this. So here's a quick breakdown of what's the difference between an ETF and a mutual fund. So I'm using Vanguard to explain this because they have a really good page on their website to help you understand the differences or similarities also. So they are actually very similar. They are both professionally managed funds. I mean, there's usually a group of professionals who buy and sell the individual stocks when it's inside the mutual fund or the exchange traded fund that you buy as an investor. So rather than you having to buy and sell a bunch of different stocks or a bunch of different bonds individually and take that risk, for one, it takes a lot of money to buy individual stocks or bonds and to be diversified, meaning that you're buying a wide variety of different investments. Because remember, investing is risky, so there's always a chance you lose money. So it's better if you spread your money out. So you buy an ETF or a mutual fund, they spread the money out for you. You don't have to worry about it as much. It's a lot easier. So that's why you buy an ETF or a mutual fund. Now, once you decided, yes, this is the way I want to invest my money, then you want to decide, do I want an ETF or a mutual fund? And so here's the difference. So both, like we talked about, both are less risky than investing in individual stocks and bonds because you are investing in a bunch of different stocks and bonds with one purchase. Both offer a wide variety of investment options, meaning it doesn't matter if you buy an ETF or a mutual fund, there are a bunch of different types of funds or ETFs you can buy. The type is what it's actually invested in. So you can see at Vanguard, they offer more than 75 ETFs and 140 mutual funds. So there are a ton of different options you have, both overseen by professional portfolio managers. And why I like Vanguard so much is they're both commission-free at Vanguard, meaning you don't pay a commission. You can buy and sell their funds with no commission, which is awesome. If you prefer lower investment minimums, an ETF could be suitable for you because you can buy one share at a time, which could be as low as $50. So you can invest into an ETF for as low as $50, whereas a mutual fund requires a minimum initial investment. Most of them at Vanguard are $3,000. However, there are some target date funds that have a minimum of $1,000. So there's possible, at least with Vanguard, to invest with a minimum of $1,000 into a mutual fund, and with an ETF could be as low as $50. So you can see if you don't quite have $1,000 or $3,000, then you'll want to definitely invest into an ETF to get it started. If you want to have more hands-on control over the price of your trade, what that means is the flexibility of when you want to buy and sell it. So if you're looking at getting a certain price for buying it and getting a certain price for selling it, meaning that you're more active, you're more worried about, okay, what is the price I'm going to pay today versus what can I sell it for tomorrow, then an ETF could be a more suitable investment for you. If you're not worried about necessarily the price that day, you're more in it for maybe a long-term buying period, then a mutual fund could be a suitable investment, because no matter if you buy or sell during that day, you pay the same price as everybody else. So it puts a little bit more even playing field. You don't have to worry about, oh, am I buying it at a good time of the day or not? So you just buy it, and the price is actually calculated by the value of the assets in the fund for the previous day. If you want to repeat specific transactions automatically, an ETF wouldn't be a suitable investment for you because you can't make automatic investments or withdrawals into or out of an ETF. A mutual fund could be a suitable investment in this scenario because it does allow you to make automatic investments or withdrawals. So this is nice if you want to set up your portfolio to start to automatically invest or automatically withdraw money, to use once you get into the retirement phase. So that's the nice part about a mutual fund. Again, an ETF would take more hands-on work for you to do that. You'd have to physically go in there, make the buy or sell orders on the dates that you wanted to make those happen. So again, it's a little bit, ETF is a little bit more for hands-on. Mutual fund, a little bit more hands-off. If you're looking to buy an index fund, you can actually buy both.